right, so this is another Chapter 5 practice problem, and this one is a taxpayer named Irene. And again, for Chapter 5, we're talking about different types of income that are either included or excluded from gross income from a tax perspective. And so for this problem, we have another laundry list of potential income items, and we have to determine what amounts of those are actually included in her gross income. All right, so we'll just go piece by piece and talk about them as we go. So we've got Irene. She's disabled and she receives benefits, she receives payments from a number of sources. The interest payments are from bonds that Irene purchased over past years and a disability insurance policy that Irene purchased herself. Okay, so let's talk about these things. Okay, so we've got interest from bonds issued by the city of Austin, Texas. I'm going to make this a little bigger, sorry. And the interest from these Austin city bonds is $2,000. Now, these are municipal bonds, so none of that interest is included in her gross income. Okay. She has Social Security benefits of $8,200. We're going to come back to the Social Security benefits, so hold on there. Interest in the U.S. Treasury bonds. The U.S. Treasury bond interest is taxable. So she has $1,300 of gross income as a result of those bonds. Interest from bonds issued by Ford Motor Company. Those Ford Motor Company bonds are corporate bonds. That interest is also taxable. So she has $1,500 in interest from those bonds. Okay, so here's an interesting detail. So she has interest in bonds from the city of Quebec in Canada. Now, we know that U.S. municipal bonds the interest is not taxable. That is not true for international bonds. So the interest from the city of Quebec bonds is taxable because that is not a U.S. city. Okay, so pay attention to those. Disability insurance benefits. Remember, this is a disability insurance policy that Irene purchased herself. Since Irene purchased it herself, those insurance benefits are not included in her gross income. If her employer had paid for that policy for her, then those benefits would be included in her gross income. The other practice problem that I posted regarding Ken, I give a very thorough explanation of disability insurance benefits. So if you have any questions, go and look at that Ken problem as well. Okay, so none of those payments are included in her gross income. All right. Distributions from a qualified pension plan. Distributions from pension plans are included in gross income. It's not an IRA, it's a pension plan. So those things are included in her gross income. All right, so now what we're going to do is we're going to add up these items. And I know we still have to deal with Social Security benefits, but we need to add up these items first. So let's do that. All right, so all of those items together are $8,950. All right, so now we have to deal with the Social Security benefits, okay? So I'm going to move this up a little bit, and I'm going to change color. Okay, so Social Security benefits are potentially taxable and potentially tax exempt. Okay, it depends on a couple of things. Now I have updated the schedules on on our Canvas in the files section. So in files, spring 2022 schedules, I have updated that file to include the Social Security benefits. Okay, so let's talk about this now. So Social Security benefits are potentially taxable up to 85% of the benefit you receive. Okay, but whether or not your benefits are taxable is dependent on a modified AGI amount. Okay, so modified AGI determines okay, so modified AGI determines how Social Security benefits are taxed. Okay, now you may be wondering, what the heck is modified AGI? Well, modified AGI is not always the same, but for Social Security purposes, modified AGI is regular AGI plus your tax-exempt interest income plus excluded foreign income and some other deductions that we don't have to deal with. So I'll asterisk that, okay? So what we have to do is we have to look at our modified AGI, all right, and then see if our Social Security benefits are taxable or not, all right? So let's do this. Let's figure out what Irene's modified AGI is, all right? And that's their modified AGI before you consider Social Security, okay? So Irene's modified AGI. So first thing we're going to do is look at her regular. All right. And we don't have any information on deductions. That's okay. So right now her regular AGI is $8,950. Okay. Now, what do we have to add to that regular AGI to make it modified? Well, she doesn't have excluded foreign income. We don't have to worry about these 4 AGI deductions, but we do have to look at tax-exempt interest, okay? And so remember, we had City of Austin bonds, and we had interest of $2,000 from those City of Austin bonds, okay? And so that makes our modified AGI $10,950. okay? Now, what we're going to do with that is put it into kind of a three-tiered system to determine what portion of this, if any, or what portion of her Social Security benefits, if any, are taxable. Okay, so I'm going to write out those three tiers. Again, those three tiers can be found in that schedules file on Canvas. All right, but I'm going to write them out here as well. Okay, so the first tier. Okay, so this first tier says if modified AGI, all right, plus 50% of our Social Security benefits is less than $25,000, then our Social Security benefits are not taxable. Okay, so for this problem right now, what do we know? Well, we know our modified AGI is $10,950. And our Social Security benefits from the problem were $8,200. So if we add half of that, which is $4,100, okay, that is, those amounts are significantly less than $25,000. So for our purposes, Irene's Social Security benefits are not taxable. And that's okay, but I want to talk about the other two tiers because we'll need those for other problems, okay? So that's that first tier. So what if your modified AGI plus 50% of Social Security benefits is greater than $25,000? So let's talk about that. So if okay, so the next tier says if your modified AGI plus 50% of Social Security benefits is in between essentially 25,000 and 34,000, then your taxable Social Security benefits are the lesser of %50 of your Social Security benefits, or 50% of modified AGI plus 50% of Social Security benefits minus $25,000. All right, so that's the second tier. And then you're hopefully asking yourself, well, what happens if the modified AGI is over $34,000? Well, we're about to find out. So if modified AGI plus 50% of Social Security benefits is greater than $34,000, taxable Social Security benefits are the lesser of $85% of Social Security benefits, or 85% of modified AGI plus 50% of Social Security minus $34,000 plus the lesser of $4,500, or 50% of Social Security benefits. All right, so the good news here is you do not have to memorize these three tiers. They're on that schedule sheet, okay? So let's kind of run through them generally again, all right? So you've got these three tiers, right? If you have someone that has Social Security benefits that they're receiving, you need to test to see if those Social Security benefits are taxable, okay? If their modified AGI plus 50% of those Social Security benefits is less than or equal to $25,000, that's this first tier. None of those Social Security benefits are taxable, okay? If their modified AGI plus 50% of Social Security benefits is in between $25,000 and $34,000, now you have these two tests. You have to look at the lesser of 50% of Social Security benefits or 50% of modified AGI plus 50% of Social Security benefits minus $25,000. That would yield you the taxable amount of those Social Security benefits. Okay? Now, the last tier, if your modified AGI plus 50% of Social Security benefits is greater than $34,000, now you have a different two tests to see what amount of that is taxable. Okay? And again, it's the lesser of 85% of their Social Security benefits or 85% of modified AGI plus modified AGI plus 50% of Social Security benefits minus $34,000 plus the lesser of $4,500 or 50% of Social Security benefits. Okay, so The reason that those are always provided to you guys on the schedules is because, you know, they seem somewhat convoluted. I would love to be able to give you the whole theory behind these 3 tiers, but I cannot explain to you the theory behind those 3 tiers. Okay, now it should be noted that these 3 tiers are for single filers. Okay, there are a different 3 tiers for married filing jointly. We are not going to deal with those. You need to know how to work one set of the tiers. The process for the married filing jointly is the same. They're just different numbers. Okay, so to kind of come to conclusion on Irene, all right, we talked about the fact that the city of Austin bonds are tax exempt. Okay, her Social Security benefits, because her modified AGI plus 50% of her Social Security benefits is less than $25,000. She has no taxable Social Security benefits. Okay, so her gross income after all of that calculating is $8,950. Okay, that's the end of the Irene problem. Thanks.